recording started. All right. So I just love these affirmations that you all are dropping in here. So you want to make sure that you are using your affirmations. Okay, Forbes female, you want to make sure that you are using your affirmations. So that's the first thing that we do. That's the very, very first thing that we do. We always make sure that, you know, we always make sure that we affirm. Okay, we always make sure that we affirm and we walk into the affirmative, the mindset. Okay, the mindset, the mindset, the mindset. The mindset is very powerful. You always want to make sure you walk in that. All right, so I see a few of you all that's still logging on, and I just want to say good evening, Alaska. Good evening, Norcross. I definitely see we have BYOB worldwide on here this evening. So for those of you all who, good evening, Akron. So for those of you all who have just logged on, you know, I just want to say welcome, welcome, welcome to BYOB Market Talks. This is Tasha M. Dyer, the Trade Whisperer, creator of the BYOB Cash Out Strategy. And so as you continue to log on, make sure you drop it in the chat. Drop it in the chat. Let me know where you're calling in from. Drop it in the chat. Now, there's a few things I want to get started with you all this evening. Now, if good evening, Columbia, look at you guys. Just come on in, come on in. So if this is your first time here with us this evening, let me get a 111 in the chat. Let me get a 111 in the chat. And if you are still learning how to cash out, let me get a 222. All right. If you're still learning how to cash out, let me get that 222. Welcome, welcome, welcome. Welcome and welcome back. Welcome and welcome back to each and every last one of you all. All right, so as we get started, I just want to, you know, I'm gonna go ahead and get my screen share together. But as I do that, now for those of you all who ordered a book, okay, those of you all who ordered a book, I just have to say thank you. Be Your Own Bank, hidden in plain sight. I know some of you have them, some of them are shipping, some of them that, you know, so just if you're enjoying that book, you have your book, you're excited about it, you know, just thank you. If you are joining us and you have not ordered your book, you can definitely get that at BeYourOwnBankMovement.com. Now you have to spell that out, guys. You have to spell that out, okay? You definitely have to spell that out. I know many of you is just kind of shorten the BYOB, but I want to make sure you know that you have to BeYourOwnBankMovement.com, okay? BeYourOwnBankMovement.com. Actually, where do I want to get started this evening? Over here. So, okay. All right. So for those of you all who are just joining us, right? Those of you all who are just joining us. Now, you should have ate good on this today. That you're just joining us and are new to the call, definitely want to kind of walk you through how we do things, okay? Want to walk you through exactly how we take trades, the mindset behind our system, our schedule, and what we do. And there are a few things that we're going to discuss this evening to kind of help you understand some of the things that we also take in the morning, like the trades, the setups. So just from an understanding standpoint, all right, just from an understanding standpoint, what we do here in the evening on BYOB Market Talks is we educate you, right? We educate you to the process. We educate you to the understanding. We educate you to make sure that you know how to take trades, right? You understand how to be the signal, how to be empowered. You know, you understand how the market executes, how the market operates, right? That's what we want to make sure that you definitely understand. And then also, once you understand that, what we do in the morning, you notice that in the mornings, I'm never like, okay, this is a trade, take this trade, this should take profit, this should stop loss, because this is why so many of you all see success. This is why, you know, you guys are so empowered, and you're actually empowered because you are empowered. And that's how the BYOB system is set up. Is for you to be empowered and for you to be able to take trades and for you to be able to execute at the highest level. That is what we do. Now, what we did last week is make sure that you understood the different types of markets, you know, the central banks, the geopolitical, the fundamental markets, okay? So central banks, economic release, geopolitical markets. So we wanted to make sure you understand that that's the fundamentals of the market. But yet we always talk about the technical. So last week, because this week we have every single market. We have the central banks. How many news releases did we get today? How many of those did we actually get, even just this week? And then tomorrow, think about it. That was the central banks. But then tomorrow, think about it. The economic release is where we're talking about non-farm payroll. And so many of you have heard of non-farm payroll. And somebody just say, oh, it's NFP week, or tomorrow's NFP Friday. But do you really understand what that means? And so that's really what we talked about last week. And so for those of you all, who are joining us this evening, those are the things you want to go back. And then of course, the political market. Now, the political market is the market that we happen to be in right now. We didn't have an election day. We're having an election week that can turn into an election month, that can turn into, so these are just things you want to understand. And if you kind of think about it, before, Brexit is also political. Brexit is also a political market. And we've seen the market impact by that. And the reason why we wanted to stress and help you understand the importance behind that is because of the simple fact that Brexit is still going on. It's literally still happening. It's been a year. They left a year ago. They broke up a year ago, and now they're still here. And what do you see with our election process? The exact same thing. And so you want to understand that. Now, that's that. I want to leave that right there. I want you to go back and watch last week's training. I definitely want you to do that. And so, but also, right, we have things that are impacted. Before I kind of separate away from that, we definitely have things that are kind of impacted by what we see. We have, this is like impacted by what's going on. It's impacted, right? We talked about this morning about safe havens. We talked about, those types of things. And so, Bitcoin, gold, the indices, things that are heavily impacted. Now, I just talked about you all being empowered, right? But every now and then I'll drop something to you. I just want a 777 in the chat if you've been riding this Bitcoin. I just want a 777 in the chat if you took profit on this Bitcoin. Whether you got in and out or you still riding it, whatever it is you decided to do, just let me get a 777 in the chat. And the reason I'm saying that, there we go. The reason why I'm saying that, and the reason why I'm asking that, is because when we do those setups in the morning, or when we navigate the market in the mornings, or we're showing you, it's really for you to identify and be able to place those trades. It's for you to be able to analyze the market and be able to take those trades. There we go, all those 777s. So it's for you to be able to do that. And as you can see, my first place I told you, so every now and then I'll tell you what's going. Now, if I tell you it's going to go there, you need to take that trade. So I'm just going to throw that out there. If I say take the trade, you want to take the trade. So, but you see, this is where we went, and we were down here, and I told you guys, somewhere up in here, I was like, okay, it's going to hit 15, I'm saying 1,500, no, it's 15,000. I was like, it's going to hit 15,000. It's going to hit that 15. And then it was like, okay, now we're talking about 1,550. And look where it actually hit. We're up here. It actually surpassed that. Once it broke this pivot line, you should have been able to continue to ride this out. You should have seen another entry point coming over here, utilizing the tools where we're going to get to this. So just bear with me just a little bit. I just really want you all to understand the importance of the calls tonight and the importance of the call in the morning, okay? The importance of the call tonight and the importance of the calls in the morning. So it's not, you also can see, look at all these buy-in. And I want you to understand, and hopefully you see my mouse, and it's over here on the alert section, and I change it to the Bitcoin, but you can definitely see all these cryptocurrencies have been buying, right? And so Bitcoin, when we were on there this morning, it was alerting for a buy, but I also told you where it was going. So if I say take a trade, then go take the trade, but of course, wait for your entry point and things like that. So, but you can definitely see what's going on with it, what's transpiring, and what's happening. And if I look over here, I'm quite sure. Let me show you this really quick, and then we're going to talk about the strategy, and we're going to talk about we're talking tools tonight to a certain extent, because this Thursday we didn't have a call Tuesday because of the election. So let me address that too real quick. So talking about what we were just talking about with the different types of market. You know, we get the question all the time and we always give you the same answer, but now I want to put it into the to actual reality, right? Because we always tell you, don't try to predict, don't try to assume, don't try to do this, you just ride the wave. Well, here's the perfect example, right? Based on what happened, because I went back and looked at the markets and went back and looked at things based on what happened in the last election, okay, the market reacted a certain way. Looked at Brexit, the market reacted a certain way. Now the market is still reacting, but this is the point that I'm making. It still reacted that certain way, but this is the point that I'm making. We did not have a call at all on Tuesday because of the election, not one call. And because the expectation was for it to react after the election, after it closed. So not the day of, not that morning. Well, guess what happened Wednesday morning? Wednesday morning was like watching paint dry. And that was the expectation for Tuesday. But yet, we did not have a call. You all are empowered. You know how to be the signal. You are BYOB master traders. And guess what? You lit up the Telegram. Nothing but 777 in the chat. So it's not that you slept in. It's not that you didn't get on the call with us. It's not that you were like, well, I'm not on a call with them, I cannot take the trade. You all jumped into the trades. You navigated it. And even throughout the evening, the market did not go into watching paint dry mode until there was no president, right? There's no president-elect. There's no, right? We don't know what's going to happen. So that's when the market actually stopped. And so this is another reason why we talk to you about your mindset, your affirmations, you know, being non-emotional, right? This is why we talk about those things. And so, and also talk about us not doing signals, you being the signal. And so because you're the signal, that's why you're in profit. That's why these things transpire. So now let's go ahead and navigate to this evening. I just had to cover that because we didn't have a call and I wanted to kind of make sure you understood. So, but before we do move on, questions, comments, testimonies, drop it in the chat. Questions, comments, testimonies. Questions, you got emotional on Tuesday? No. So anytime that happens, and I'm glad you're open enough to acknowledge that, because that's the first step of making that shift. So anytime anything like that happens, you always and you always want to shift that immediately. I mean, a good affirmation is I can control my emotional state. You know, that's an affirmation. I can control my emotional state. I can change my emotions instantly. However, you have to, whatever you have to say, whatever you have to do, but you need to acknowledge that. You have to first own it, you know, accept responsibility for your actions and not the, oh, it's the market. Oh, this currency is crazy. Oh, this, oh, that person, oh, that, right? Because that's who we are as people. That's human nature because that's the environment in the world we live in. So first, you want to make sure you shift that, okay? You want to make sure that you shift that mindset immediately. And then once you shift it immediately, you begin to practice it and practice it and practice it and practice it and practice it. And that's why we do affirmations before we get on this call. Now, for those of you all wondering, mindset is very key and critical to you taking this shift into your destiny. So if we have to spend a little time on mindset, then we're going to do that, because anything that I have to talk about tonight, I can do it in a 2 or 3 or 4 part series, you know, whatever we have to do. But we always want to make sure that we're operating in the right mindset, okay? Because that's going to impact your trade account. So now you say you've never gotten on the AM call. When is that? Monday through Thursday at 5 a.m. and 9 a.m. Monday through Thursday at 5 a.m. and 9 a.m. And if you're in the Telegram chat, which you should be, everybody should be in the Telegram. So if you're in that Telegram, then it's actually pinned to the top along with the information for the strategy that we're going over this evening. BYOB cash out strategy, okay? Just want to highlight that. Now, as you can see, what we're looking at right now is this chart. So I'm going to talk about this one for just a minute as we transition into everything else I want to talk about this evening, because of the simple fact that you can kind of see how it's been reacting, okay? Now you see that these pivots are here on the daily chart, right? That's what we are. And as we're looking at these pivots, being here on I'm not the daily, the hour, but I'm trying to say they happen every day. That's what I'm getting at. You get a new set of pivots every day. Now, why do I like these pivots? Why, I love the fact that these are on here. Look how tight they were and look at how the market went sideways. Look how tight they were and look how the market went sideways. These pivots, on the morning calls, we always put pivots on the charts. So for most of the time, especially when we're dealing, just most of the time, let me just say most of the time. So you'll see that this is moving sideways. And so now look right here, look at how tight it was and look how much movement we didn't have. It began to open up. So when you look at your pivots, the pivots also help you understand how much liquidity is in the market, right? So as I'm looking right here, and so you can see that there was more liquidity in there. So as it began to open up and as it began to rise, what are you seeing? Look at how much wider this got, right? You can see that, you see how much wider this got. So that's also going to help you when you're taking your trades, right? Kind of looking at the pivots. So any of you new to trading, when let me close this off real quick. Any of you new to trading, the reason, one of the things that I like to do, I like clean charts, because we can look at that and it's like, oh my goodness, there's so much going on. And that's also goes back to mindset. You just kind of take the items off the chart and then you begin to add them on, but you add them from an understanding standpoint and just not dumping stuff on the chart. We don't want to just dump, right? It being a continuous dump, just a continuous dump of indicators and different things on the charts. Anytime you add something on the chart, you want to add it and you want to understand what you're adding. So, well, congratulations. So you got Emotional Tuesday, but you bounce back. And I'm saying this because there's somebody else on this call. You got Emotional Tuesday, you bounce back, you checked your emotions, and today you went live. Look at there. So you went live. So that's phenomenal. So that's why you cannot be emotional, guys. So that's congratulations for that. So for any of you all that are hesitating on pushing that button, it's a demo account. Push the button. Okay, push the button. And because how are you going to learn how to trade? You have a child that's trying to learn how to ride a bike. You guys hear my daughter in the mornings, she's distance learning, different teacher, so different scenarios, right? So that's why we've been interrupted so much lately. But what I'm saying is, decide, look, I want to learn how to ride a bike. I need to learn how to ride a bike. So you got to take those training wheels off. But you start riding a bike with the training wheels. So that demo account, we talk about preseason in football. That's your training wheels on a bike. So when you take those training wheels off, when you're learning how to do it, how many times do they fall? How many times but they get back up, they bounce back up. So how are you going to learn how to ride a bike if you don't get on the bike? How can you learn how to ride the bike if you don't get on the bike? You can't learn how to swim if you don't get in the water. So I can study all the fundamentals, cup your hands, do this, backstroke. I can do all of that. But if I don't push the button, if I don't get in the water, if I don't get on a bike, I will not learn how to ride it. So how are you going to learn how to trade? How are you going to be a master trader? Push the button, okay? Push the button. Get in a demo account. It's the broker's money. It's not your money, it's the broker's money. So push the button. Okay. Now, so and just understand that. So and just I just want to tell you, I don't know why that's on me so hard, but just push the button. Somebody needs to hear push the button. That's how you're going to learn how to trade. And you want to do it several times, right? You have to do it consistently, okay? You don't want to just one. All right, sorry about that. So, but yes, so that's what you definitely want to do, okay? That's where you definitely want to make sure you're operating from. All right. So also now, You say, yes, practice with the broker's money first and let go. Perfect practice makes perfect. Ah, you got it. Perfect practice makes perfect. Absolutely, absolutely, absolutely. Now, what we're looking at, now let me put these pivots back on here, because when I put these pivots back on here, what you're seeing is the simple fact that this definitely rose in value, right? You can definitely see that this definitely was rising in value, okay? And as it was rising in value, what you're looking at is the simple fact that as you see how it's going with the pivots, you see how, you know, it was being called, but this is just something you want to be able to do. So if we give you a trade, we analyze in a trade, that's definitely something that you definitely want to go back and you want to analyze and you want to make sure that you're looking at. So let's just go ahead, because what I want to talk about also this evening is I'm going to talk about the strategy when I get there. But one of the things that I definitely want to highlight this evening is the harmonic scanner, because most of the time when we get on the calls, you'll see a harmonic pattern already there, okay? You'll see the harmonic pattern already, you know, on the charts. I'll have already looked it up. I'll have already analyzed it. And so just so from an understanding, you know, this is one of the tools that come with I Am Mastery Academy. Now, what this does is it identifies harmonic patterns in the market, okay? That's what this does, is identifies those harmonic patterns in the market. So if when you get to the higher level series in the academy, it definitely walks you through harmonic patterns. It talks to you about them. It educates you on what the harmonic patterns are. When you're going through understanding how to trade the BYOB cash out strategy, one of the things that you're looking for, one of the things that you're looking at is the way we devise this and the way it's broken down is you begin with the basics. And that video is literally in that playlist, but you begin with those basics, okay? And those basics are your pips, your lot sizes, just, you know, support and resistance lines, you know, what is Forex? So those are the basics. Then you transition to the trade and BYOB cash out strategy. And in that, it has the things that help you understand. Then you go back and finish. What I don't want you to do is not go back and finish, but I also don't want you at series 400 before you have a demo account either. And that's psychologically for a reason. That reason is simply because we can learn and we pour so much in our heads, and then you look at it and then you can become overwhelmed. And Dr. Bythe will tell you all the time, how do you eat an elephant? One bite at a time. So how do we want to do this? So you look at it, you grab a little piece of it, a little bit at a time, and then you navigate to the strategy, right? You understand the strategy. You begin, let me get my 10 pips and cash out. Let me get my 10 pips and cash out. I'm in my demo account, right? But I still don't understand support and resistance, or I still don't understand market structure, or let me not say understand, I haven't learned it yet. You know, I have not learned the harmonics. I have not learned, you know, the Elliott waves. I have not learned those things yet. So as I'm learning that, but I can put all of that in my head, but if I haven't touched the chart, then you look at it, you're like, oh my goodness. So we want to make sure, you know, from an educational standpoint, an understanding standpoint, it's done like that for a reason, because now you have hands-on as you're learning everything else. You are hands-on as you are touching it. So you definitely are there. So, okay, awesome. You said the YouTube channel has made an immense difference for you. So that's fantastic. I love it. I love it. I love it. So that's what that does. But you still have to go back and finish series 3 and 400, okay? Once you begin doing that, and then that's going to be, so you always hear me say, you know, depending on where you are, and if you're a 111, a 222, a 333, you know, depending on where you are, then that's going to help you, and it's going to elevate you, and it's going to help you with those dynamics. So that's what all of that means. So now we're understanding, you know, how this works and why it's so important, because we don't want to, well, not everybody, we do have our super scalpers, but we don't always want to say just let me get a few pips here, a few pips there, in and out the market, right? Some of you all want to understand, if I'm saying look to the left, look at the market structure, where is this going? That's going to assist you with that. And so that's going to help you, but this is going to get you in the market. So now looking at this, one of the things that you would see me do most of the time is calling from the hour. Now, it's a reason behind that. It's a reason why they're called from the hour. Now, before we go back to the vibrato, one thing I want you to understand, do not trade on here, okay? Do not try to come here and adjust things. Do not try to do that. This is not One, it's not a standalone, okay? This is not designed for you to just trade it without further analysis. It's not a signal. It's not meant for it to be a blind trade. It's not meant for it to be any of that. You don't leave this on this chart. But what I want you to also understand is that if a harmonic pattern does not play out, it falls off of here, okay? Just like I trade earlier. So we had some trades earlier that never played out. You know, GBP AUD and the Euro USD never played out. Even GBP AUD didn't play out. But that's the market conditions. But the reason I'm highlighting that and the reason I'm saying it, and like when I put it on there, I'm always telling you, make sure you wait on a trade. Make sure you wait till it's ready. Make sure, do not blindly take this trade regardless of what it's saying. Because the ones that are still in, like if I come here and you look down here, okay, if I pull one from down here, what's going to happen is you're going to see it's take profits. If I can pull it up, right? So look at where this was. This was way over here, and it just hasn't. It just still happens to be on here, but it needs to widen up. But this, you know, it might be like this because of how long ago it was, because we're on our chart. But you see, think about this. That was like, look at this. Look at this. This was actually October the 21st. So you think about where we are and what today is, right? And so, because each one of these are an hour candle, so it's still on here because it just haven't been knocked off yet. So you see that they'll hold so many and then it'll knock it off. If I come up here, come up a little bit, I can see the same thing, right? So where's my harmonic pattern? So here it is, it's right here. So you can definitely see that this one took profit. But where are we at? It kept going, but yet it's still on there. And this harmonic pattern is from where? October 20th again. So the point I'm getting at, the point I'm making is if every single harmonic pattern from every single day and every single morning was still on here, right? If it was still on here, then we wouldn't be talking about October the 21st, because you know how long this would be, how many would be on here. Now, why is it? Because I've never seen one on here from that long ago. But what type of market have we been in? A political market. So if the harmonic pattern does not play out, it's not going to stay on here. The ones that are playing out are still on here. So what does that tell you about how many have played out? What does that tell you about how many have taken profit? How many have actually? So they're going to fall off. So that's the point I'm getting at. So when they come on here, all right, like this GBP NZD, so you're looking at this, but you're not just going to blindly take this trade. We're going to bring it back to the vibrata. Bring it back to the vibrata means I'm going to take it to the vibrata. That's why you always see it in the mornings. So that's literally what we're doing. We are analyzing. We're coming here for the harmonic patterns, right? So the same way on the charts, okay, how can I tell where the data is from? We're going to come back here from the harmonic patterns, and then we're going to go back to the vibrata. So this is the same chart, right? No matter what tool we're on, you know, so it's the same chart. So the price runs along the side, and then the date runs along the bottom. The price on the side and the dates and the time are on the bottom. So it's just that graph that, you know, from math class, that, you know, from back in the day when we didn't think math was important, you know, all those other classes that we took. So this is what this is. And so this is nothing but you have something on this axis and something on this axis. So right across the bottom down here is where that is, right there. So you can kind of see that. So now, right, so now when we come over here, so when I'm looking at these are the most recent ones. So the most recent ones haven't played out. When they don't play out, they fall off. So I know I talked about GBP NZD. You see it touch take profit one, it came back. So we're not trading on here, okay? We're not trading on here. This is why we bring it back to the vibrata. So what I'm doing is highlighting why you take it back. Then you can also look at some, and I'm actually show you something on the 15-minute chart. So, but I want to help you understand. But yes, you have them that are caught on the 15-minute chart. And on the 15-minute chart, you want to understand where you are in the market. So if I'm going to take something on the 15-minute chart, I need to understand where I am in the market. I really now need to understand the big grand scheme of things, because the hour is going to play out before the 15-minute, but that's going to happen because of where you are in the market. So now you understand why these are there in the morning, what it is that we're looking for, why we're looking for it, and you know, just it identifies the harmonic patterns in the market, but that does not identify an actual trade that I can take right now. Okay, it's a possible potential trade opportunity. So a harmonic pattern, yes, a harmonic pattern, when you get to this pattern, it should go turn into a buy. If I'm looking at another one, you know, it should turn around and come into a sell. That's what a harmonic pattern for the most part does. It identifies those patterns in the market, and it's just called harmonics, the harmonic patterns. And that's where they turn around. They have different types. The type of pattern is behind it. If it's a butterfly pattern, right? Shark, you see, they just have Gartley, they just have different ones on here. And so crab, I mean, they just have different ones. So now let's go back. Okay, let's go back. So let's go back and let's talk about the BYOB cash out strategy, right? Does this look familiar? This look like what we've been looking at all day? So let's talk about the BYOB cash out strategy. And then of course, we're going to talk about those patterns and how they kind of execute and what they do. So now as I'm looking at this, what do you mean? At what point do I cancel a potential vibrato trade? The vibrato trade, let me come to that. I'll come to that because I think I know what you're asking. You talking about as far, what do you mean, take profit, or do you mean, you saying are you talking about from the harmonic scanner that I bring back? Or are you talking about like one of these that just hasn't played out yet? So just give me a little bit more clarity on that. I'll answer it to the what I think I know what you're saying, but just give me a little bit that didn't play out from the 15 on the harmonic or from here. I think I'm gonna answer your question. Hold it for just 1 second. I think I'm gonna answer you. So, but if I don't, I'll come back to that. So now as I'm looking at this, okay, as I'm looking at this, you know, we talked about these earlier, and I'm gonna come back over to this one. Now let's talk about the BYOB cash out strategy, okay? Let's talk about that. So now you have the blue line that cross over the red and the downward momentum, okay? Blue line cross over the red and the downward momentum. Then I have a red candle with a flat top. Then I'm looking for a PSR flip. Now with this, okay, let me be a little bit more detailed in the evenings, okay? Blue line cross over the red and a downward momentum, right? Blue line cross over the red and a downward momentum. This is pretty much where it crossed over, right up in here. And then you have that red, I'm gonna leave it to the side. Then you have that red candle with a flat top. Now this crossover needs to happen, right? This crossover needs to happen around the 80 for a sell, around the 20 for a buy, all right? Around the 80 for a sell, around the 20 for a buy. That's what I'm looking to happen. That's what I'm looking to manifest, all right? That's what needs to happen. Now, as I do that and I understand that, this is a leading indicator, all right? This is a leading indicator. Then I'm gonna come back over here. So these are lagging. That means this has to happen first. So now I'm looking at the blue line cross, blue line cross over the red in the upper momentum. I have a green candle with a flat bottom and my PSR flip to the bottom right here. Same thing. Now, so just to kind of help you in your mind, I just want you thinking top, top, top. Over here, I want you thinking bottom, 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 right? That's where I want your mindset. That's what I want you thinking. So top, 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 bottom, 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 okay? So that means you want everything on the bottom. I want everything on the top over here. So now what I'm gonna do is I drop down to the 5 minute, right? I wanna drop down to the 5 minute. When I drop down to the 5 minute, I'm checking for my time frame confluence. That means that this needs to still be buying, all right? Now over here to the hour, it needs to still be buying or still be selling, whatever it is I'm looking for. Now, looking at this, we can look at any one of them. We've been like, all of these are valid trades, okay? But, and just to kind of say right here where we are right now, this one, okay, this one, you can see where this is looking up for a buy, okay? This is looking up for a buy. Now, when I say has to look like does not mean I could take that trade at this moment. That's not look like, okay? That's definitely not look like. All right, that's not look like. So now over here, what we talked about earlier. GBP is the only one that gives you that exception to the rule. So you see that I'm in a sale, all right? You see that I'm in a sale and sitting here in this cell, okay, sitting here in this cell, then, but what do you see right here? What I see right here is this is actually in the up. So you want confluence on your time frame as well. I need confluence on my time frame as well. Now, the confluence that I'm looking for on my time frame, this is looking like it's gearing up for a sale, but this is still buying. Now, because it looks like, remember, why would it have been buying? It should have been buying because this was buying before, right before it. So what I want to do, because I see indication of a sale, I see indication of a potential sale, I can use my 30-minute for GBP. I can use my 30-minute for GBP because of how much liquidity it has, all right? Then just like vice versa with CHF, it has the least liquidity. So because it has so little liquidity, then what am I doing? You notice that we always, I'm not going to pull a CHF pair up, but you notice when I trade a CHF, I always have confluence across the board. I'm looking at, you know, my hour, then I look at my 4 hour, I'm looking at, are they all overbought? Are they all oversold? Where is it at? So the least liquidity, I want more confluence. The more liquidity, I can drop down a time frame like on this one. So if I drop down to the 30, all right, I drop down to this 30, what do you see? Oh, my stochastic is already changing over on my 30. I'm definitely in a sale on my 30, right? Everything is there except for the PSAR. So now I can know I can grab my 10 pips and cash out. So that's the BYOB cash out strategy. Now, what I'm looking at right here, let me get up to the hour because this is the actual harmonic pattern at call. Now, you see, this is a harmonic pattern, okay, from the harmonic scanner. So that's a harmonic pattern from the harmonic scanner. Now, that's why we're talking about this. But I also told you guys this morning that I was going to kind of touch on and talk about these trend lines a little bit to kind of help you see, because I had some pulled up this morning. Now, understanding these trend lines is, let me grab a trend line for you. These are trend candles, okay? These are trend candles. If I change it to the regular candles, look at what you have to look for and identify. I'm looking for this to turn. I'm looking for rejection. I'm trying to analyze all these candles. Of course, even with BYOB cash out, you still, right? Even with that, I'm still looking at my support and resistance lines. I'm still looking at my market structure, but this is going to help you understand when you can take a trade. These don't look nice and smooth, right? Just like when we were pulling up here, that's a big old engulfing candle. So when you look at those things, right, we wouldn't have gotten into it right there. We would have gotten a trade after the engulfing candle. This is why I love BYOB cash out strategy, because you look for engulfing candles and then you turn around and take a trade. So this is that's that price action with a twist, okay? So let's go ahead and shift this back to my Higanashi candles, okay? Let's shift it back, and you can definitely see how we entered the trade a little bit earlier because of, right, we were on a 15-minute chart. So even if I wanted to trade on the hour is when I would have gotten that trade back here. Now, so what am I looking for as far as when we're talking about this, you know, harmonic? Oh, my trend, didn't mean to do that. Didn't mean to drop it right there. I'll move it. So these are trend candles. So look at how nice and smooth they look. But you can still put a trend line on here, okay, guys? And actually, just let me thicken this up for you. I want everybody to be able to see it. So I can still put a trend line on here. I think you guys can see that now. So I can put this trend line on here, and don't talk about my trend line, right? Don't judge me. So when you're looking at these trend lines, then you want that to break. And so when I'm looking at my confluence, you know that hasn't, look, my confluence is just not there. So we know not to take the sell right now, but you can see where it's starting to break up here. Now, when I come back over here to my 15-minute chart, you can actually see that it broke it and it's coming back for that retest of that trend line. And you can kind of see how the candles, you know, even though they're trend candles, you see them more on the lower time frame. You can see more of the activity and more of what's going on, you know, on the lower time frame. Okay, so that's going to help you with that. So when you're trading on the higher time frame, okay, when we're pulling a trade on a higher time frame, all right, you definitely want to kind of pay attention, and this will help you. So if you don't need it, you don't have to put it on there. I know, you know, like I've traded forever without it. but they're very valuable. They're very good. But the reason why I've traded without them is because I'm using a trend candle. These are trend candles, all right? But yet this trend line can give you that visual and that extra that you're looking for, okay? To kind of help you identify that so you can understand, because I don't want you taking trades you don't need to be in, but then I also don't want you missing trades because you want that added visual. Now, if I pull it from the 15-minute chart, we just had a question about a 15-minute chart. One of the things is this is called on a 15-minute. Now, let me make sure this will, and you know what? You're not gonna judge me. You in the chat, she says, woohoo, that trend line looks better. I was like, you're not gonna judge me. But you know what? Everybody has their thing, and that's just my thing, right? That's my thing. So now, right here, you can kind of see, let me make this a little bigger for you on a 15-minute chart. So I actually pulled one from the 15-minute chart. And this is why I say after I talk about this, I'll come back to your question, because I think maybe it'll help answering it. If not, then I'll just address it specifically. All right. So now let me draw the other ones on here. So this is USD CAD, and we have 30525. Okay. And then of course I'm gonna drop this on here, and this is 30323. So I pull from there, 30323. So hopefully this is helping somebody this evening. Now, before you do that, right, I got it. That's where their numbers are. Even my numbers, when we were looking over here, right, I'm gonna tell you now, I adjust this and I pull this and I shift it. All right, I'm about to show you why. So I go to my line chart, and your eyes will get trained to where you don't have to all the time. But in the beginning, in your understanding, you want to come to your line chart, right? You kind of begin to identify. You see how I move this? Why? You see this line chart are closing prices. So that's why it's a line. It's the actual closing price. So it's not the open, the close, the where it wicked out to, where it wicked down to. It's the closing price. And then it goes to the next candle. And that's what creates this. So when that creates this, you know where the market closed. Because even if it wicks out, it pulls back, you want to know where it left that candle. And as far as you doing your support and resistance lines, you drawing support and resistance lines. Look at how nice, look at, I mean, just for you to get this nice move. Like if I look right here, I got a touch, 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 a touch right there. Drop that line chart on there, voila, right? Look at, of course, you know, you still have that little zone that's around it, but I dropped that on there, and look at this. Look at this, look at this, look at this, right? So you definitely have this that's going to help you with that understanding, right? You have this that really helps you where you see those touches. And so when you see those touches, and then if I change this back to my Hikinashi candles, you can definitely see, you know, where it kind of rejected. Even if it wicks down below, you know where the true closing price overall is with these candles. So now you understand where you want your take profits to be. So you see, I adjusted this and I moved this up. Got it. They use the Fibonacci's. That's beautiful. I love it, right? But I also want to make sure that my take profit is going to hit. And we will not be the ones saying, oh, my take profit didn't hit by 2 or 3 pips. I missed my take profit by, you know, a little bit. That's not going to be our story. So this is why we want to use that line chart, and you can kind of move it up so you understand. And if you get that close, side note, you can actually close the trade if you want to. But I understand we want to put that phone down and walk away from it, and this enables us to be able to do that. So now, as I'm looking at this 15-minute chart, the reason why I wanted to highlight this on the 15, because you hardly ever see us pull any, but just like we never traded on a 5-minute before, it was all about educating you, making sure you understood it, and then coming back and we can start using it. Okay, so right here, let's look at the higher time frame. You want to understand where you are in the market still. So I'm grab this trend line, or maybe I'm not going to grab a trend line because that was a horizontal line. Grab this trend line, right? Where am I at in the market? So it's gonna pull back. You see that actually broke up there, but that might be a pullback, a correction as it moves to the side. So where am I at in the big grand scheme of the market? Where am I at in the big grand scheme of things? Or it could just be look at how these touches hit. It could just have like pushed through it a little bit and it's pulling back down. You want to understand where it's at. So let's talk about this being that pull up and then it's going to pull back down. Let me see what my 4 hours doing. So it can possibly be actually about to shift and change directions, to be honest with you, because look at where we are. So you see how it touched, it rejected, rejected right here. And so this was way back in September is the last time it's been down here. So is it possible that it comes out here? It's possible. But you see, based on what we were just talking about, you know, what did it do? It broke that trend line, okay? It broke that trend line, or it looked like it's trying to break that trend line. Now, if it doesn't break that trend line, that means it's going to pull back down. How many pips is this? So you want to be up. I'm just showing you how to, with the 15, that's 29 pips. All right. But when I look at this from the higher time frame, you know, look at this from the higher time frame. What is this I'm looking at? Just want you to see this. You look at impulse, correction, continuation, correction, possible continuation. Now, how do we know when the trade shifts? When it breaks that trend line, all right? How do we know when that trade shifts? When it breaks that trend line. So when we talk about impulse, correction, continuation, down to the 5 minute being a tighter entry, all of that, this is where this is pulled on the 15 minute. So if it's actually something that look like it's gonna break that trend line, okay, get my stochastic back up here. If it's gonna break that trend line, then look at how this has space and opportunity. Look what's happening on the 4 hour. So we might come back for a retest, and that might be what is having you trade. So you want to understand what it's doing. You always want to put yourself in a position where you understand what's being called. That's what a lot of the 15-minute trades are. All right. That's what a lot of the 15-minute calls are. This might be a 15-minute call. So you want to understand where you are, right? The 15-minute call could be right here. The 15-minute call on that harmonic scanner can be right here. So those harmonic patterns, they're just the ones that's like in here. So this will be that harmonic pattern that gets called. And so now you see why outside of the political market and outside of what we're talking about this evening, outside of all of that, you definitely can see, you know, this is where those things get called at. So you want to know where they're at. And so if you blindly take them, you know, I've heard you, that harmonic scanner, it do this, it does that. Oh, no, I'm not taking that trade. I'm not doing this. You know, I'm at a 30% accuracy rate, or, you know, because it's not a standalone and you're not understanding where those harmonic patterns fall. You know, where are those patterns at? You know, what types of patterns are they? Are they reversal patterns? Absolutely. But this is a reversal right here for the smaller time frame. So it's a legit pattern. It's a correct harmonic pattern, but it's a reversal pattern for in here. So you want to understand where you are in the market. And so what happens after you break a trend line? It comes back and it corrects itself. So after it comes back and it corrects itself, so what does it look like that you caught a harmonic pattern for on the 15-minute chart? Looks like you caught one that corrected itself. So we can definitely dive a little bit deeper into this next week, you know, kind of pull some examples, help you see it, help you understand how to work it, you know. So I wanted to kind of help you transition from the type of market, which is the fundamentals, because we talk so much about the fundamentals, but we also want to make sure you understand the technical aspect of it too, and the technical part with the market structure and everything, because all of that plays together. This is the what to do. This is the what to do. So this is the what to do. But then once you understand the what to do, right, this helps you get a little bit past those 10 pips and cash out. So you understand the what to do, then you can take it to that. And now you understand why the how to do is shifted back, but then you'll get pulled back into your regular market structure. So those are the types of things that you want to understand. Because in a perfect world, right, without a political market and just a perfect market, this would play up. You know, it will come up, retest, and then come on up based on what we're talking about, right? So it definitely would have been a valid harmonic pattern, but it will come down. That's just a retest and then come up. And you shouldn't be looking for it to keep going and keep going and keep going. That's just not what this is right here. All right. And so I got the question. I want to This was another one. I don't know if I have time, but this is the exact, before I answer that question real quick, this is the same thing. So you can kind of see where this had been, this is a sideways market because of where we are, but this was also a harmonic pattern that got called. So we looked at this earlier. This is what I wanted to tell you. I have a few minutes, so I'm gonna go in a little detail, but not much. I just want to highlight something because this was our call earlier, right? This is our trade earlier. This is what we were looking at earlier, right? That's why that one is still on there. But on the lower time frame, so on the higher time frame, I got it called for a buy. On the lower time frame, the 15-minute, this called for a sell. I don't have time to mark it up for you guys, but this is why I said we'll take this into another training where we can actually walk through some together, analyze them, so you can understand how to implement it in the mornings and on your own. But so this was actually called for a buy, what we've been looking for all day, right? Then this one right here called for a sell. So on the 15-minute, that's the hour, this the 15-minute. So now you understand why I want to say one thing, the other one to say something else. And this is why. So right here, this is pulling down, but yet it's coming to this support. This is around where that take profit is. So, but it's calling this harmonic pattern because on a lower time frame, this is a reversal pattern. It is a harmonic pattern. It is a legit harmonic pattern. And that's why, when you looked at it and this sale happened right here. But on the big grand scheme of things, what we were waiting on is for this to come back up into a buy. So now you understand why you look at the hour, the 15-minute, the 15-minute, the hour, why you get different things, okay? Why it's a little different. So hopefully that breaks that down. And then also, when we're on that 15-minute, what do I tell you? Get your 10 pips and cash out or trade to that first support or resistance line. Perfect example. We have a harmonic pattern we got a harmonic pattern that's telling us that we can take this to take profit 3 way up here. So you still don't want to blindly do it, guys. I can't blindly do this because why? Look at this, okay? This stopped where? At that first support resistance line. That's where it stopped. So I have to have everything in alignment. Like right now I'm on a higher time frame and I need to have these things in alignment in order for me to be able to take that trade. It needs to be in alignment. And if it's not in alignment, then I can't take the trade, right? So you want to kind of keep that in mind as well. Okay. Now, how do I know when to cancel a potential vibrato trade? It's either going to play out or it doesn't, So I don't know if you're already in a trade or if you're not in a trade, but it's either going to play out or it doesn't. So just like these GBPs, right? This is a GBP AUD is calling for a sell. Either it plays out or it doesn't. And if it begins to play out, typically the 5-minute would be 5 pips and cash out. The 15-minute is 10 pips and cash out. And so either, that's what I'm looking for. But if I analyze this on a higher time frame, then I understand. So it depends on the type of trader you are. I think I mentioned that this morning. It just depends on the type of trader you are. If you are a trader that is a scalper, you're going to be quite happy with your 5 pips and cash out, right? You're a scalper, scalpers unite, 5 pips and cash out. You'll be just delighted with the world, right? But if you're not a scalper, you're intraday, then what you're looking for is to understand it's a tighter entry point. And when you understand it's a tighter entry point, this is the perfect example of that. Well, not this one, this one. This is the perfect example of that. Because how many times did this call today? So yes, and you and Miss Anderson. So yes, all of y'all. So, but how many times did this call today? Is when you look at this, we look at this morning, and look how this just began to play out. But if you look throughout the day, you had different GBP USDs. Of course, not now because it's getting it for a sale, but you had GBP, I'm looking for it. It's probably going to keep going. But look at all the GBPs that were buying, right? They were buying at the time. And so this is where it is. So what happens is the harmonic scanner is going to highlight that you're going to get a vibrato alert here. So if I come, like right now we're on a higher time frame. So if I come to the higher time frame, I understand what's happening in the grand scheme of things. Like right here, this is a support resistance line. This is one. Then what happens is when I go to the lower time frames, you can see the correction in there, right? Look at that. So I see the correction that happens right there. I see the correction. So you're either going to trade from zone to zone, understanding what's going on, waiting for the next alert. Because now you know you're kind of in that overbought territory. So this is more of like the advanced skill set, so but I want you guys to understand what the vibrato does before anybody tells me, but you're not at the 20 and you're talking about buying. Absolutely. Because the vibrato is scanning this and it's telling me, right? So as you begin, and I see where the market is, I can see what's happening. I can see what it's doing. And so you see these happen, you see these corrections. So if the higher time frame is showing you that it's still buying, so it's not really like I'm canceling a vibrato trade. It's just like I'm taking the trade as it identifies, and it always has to line up. Blue line cross over the red and upward momentum, downward momentum, green candle flat bottom, red candle flat top, PSR flip to the bottom, PSR flip to the top. So, and then you cancel it, 10 pips cash out, first support and resistance line. Or if it's a continuation, then I'm zone to zone, or I'm looking at the market structure, and that's going to help me understand where I can stop that trade. So like, for example, you see where it began to turn around. Typically, if I'm on an hour, I'm looking to the left on an hour. If I'm on the 4 hour, I'm looking to the left on a 4 hour. If I'm on the 15 minute, I'm looking to the left on a 15 minute. So it's just really, but the lower time frame, understand it doesn't tell us where to go, right? It does not tell me where the market's going. But I still want to stay within that market structure, just like when we were talking about these harmonic patterns. This is the market structure for that one on that 15 minute. This is the market structure for this one on a 15 minute. So I hope that brings clarity. We have 2 minutes. We talked about a lot. Questions, comments, testimonies. Questions, comments, testimonies. Questions, comments, testimonies. Drop it in the chat. Drop it in the chat. So what we'll do next week, right? What we'll do next week, not next week, Tuesday. Tuesday is BYOB basics. But what we'll do next week is we'll actually bring this back and implement some of this, because you all have to understand the morning calls. I really wanted to break this down for in the morning calls. The morning calls are literally, right? The morning calls are literally to help you implement you do what we learn in the evenings, because Be Your Own Bank is about financially educating, quote unquote, educating and impacting 1 million families. That is what we're here for. All right. That is what we do. So, thank you. That was very helpful. Also, thank you. I'm getting more clarity. The morning and the night makes a difference. Absolutely. I'm waiting on your 777 too. So you in your beginning stages, welcome to the BYOB family. Glad to have you on the call this evening. So, and I just want to highlight a few of the testimonies as we get ready to transition this call. So, I mean, just like some of the comments that were in there, I got Miss Robinson. Miss Clayton is a true testament. Got Miss Robinson. I saw Miss Thompson commenting here. I got Miss Thompson again. Another one, that's another Miss Thompson is highlighting, commenting in here. I'm talking about people that I see consistently, and there's quite a few of you guys that's on here, that are commenting, that's just very, very active on the calls. And I mean, the ones who dropped the BTC 777s, all of them. So, just want to highlight that because it's going to make a difference. It is definitely going to make a difference. And those 777s will come. Even where and Mr. Castile, where is he at this evening? Because I know he's on here somewhere. So it's just a few of you. I know who's on this call. But yes, it's going to make a difference. Thank you, Ms. Dyer. I love this info in this group. We love you too. Working on this system really got me feeling like I'm my own bank. See, there you go. So who told me you was on vacation? I love it. I love it. I love it. So, so well, he's back. He's back. I told you was on this call. So, and you drove your 777. So, but, I just want to say, love you guys. Love you guys. Love you guys. You're very, very welcome. You're very, very welcome. So you agree? Absolutely. And he made the, yeah, he did. He made the big bank. He became the big bank and he went on vacation. He did a well-deserved vacation. But as we transition this call, I definitely want you all to make sure that you go get a copy of that book. So for all the clarity that you're receiving